Welcome to the first episode of Nick Knows Insurance. So, a quick background to myself. My name is Nick, obviously. After graduating from Oregon State University, I came here to work at Olympic Crest Insurance up in Gig Harbor, Washington, where I've been a benefits consultant / producer for the past 4 years now. I've really had an exposure to the insurance industry my entire life though. My mom actually started and founded the company that we work for 23 years ago. So I got an early exposure to the terminology and the ins and outs of the insurance industry, and as a result, now I feel like I have a pretty good understanding of it. And after graduating college, a lot of my friends were getting jobs up here in the Seattle area with big companies, and they were getting their first exposure to employer-sponsored healthcare plans. They'd ask me things like, I have a choice between a PPO plan and an HSA plan, what do I choose? Or maybe, what is my deductible? Or how do my copays work? Or I want to put money aside in my HSA bank account out of my paycheck each month. How much should I even put in there? So as a result, I thought it would be a good idea to form this channel where I go over basically how to use your insurance, what the different terms mean, and how you can apply that to your everyday life. So for this first episode, we're going to go over some of the common terms that are often misunderstood in insurance plans and how they work and how you can apply them when it comes time to use your insurance. Did you know that 96% of Americans cannot correctly identify 4 of the most common healthcare terms? Copay, coinsurance, deductible, and out-of-pocket maximum. What's even more shocking is that millennials have an even lower understanding of these terms, with only 36% being able to correctly identify any of those terms at all. So I thought it would be a good idea to take a closer look at these terms and add in another term that I feel is equally as important, which is premiums. So let's start with premiums. Starting with premiums, your insurance premiums are the amount of money that you or your employer pay each month in order to keep your insurance policy active. Your insurance premiums do not contribute towards your deductible or your out-of-pocket maximum. If you do not keep your insurance premiums up to date, your policy will lapse. The next term we're going to cover is copay. Copay is a fixed amount of money that you pay for a covered healthcare service. Copays can vary for different services such as office visits, lab tests, and prescriptions. Copays often contribute towards your out-of-pocket maximum, but they do not contribute towards your deductible. This brings us to our next term, which is deductible. Deductible is often one of the most confusing terms for people, so we're going to use the analogy of filling a bucket, and your deductible is going to represent the first line in that bucket. We'll come back to this example later. A deductible actually is the amount of money that must be satisfied by a member before the insurance company will begin to share the cost of services with that member. Oftentimes, copays and prescriptions will not count towards your deductible, but they will count towards your out-of-pocket maximum. We'll take a look at how this all works in this later example. After you've met your deductible, your coinsurance begins. Coinsurance is the percentage of cost of a covered healthcare service that you pay after you've met your deductible. In the bucket example, coinsurance is going to represent the space between the first line and the top of the bucket. For example, if you had an insurance plan with 80/20 coinsurance, that would mean that after you've satisfied your deductible, you'd be responsible for paying 20% of a covered healthcare service, while the insurance company pays the other 80%. This brings us to our final term, which is out-of-pocket maximum. Your out-of-pocket maximum is the total amount of money that you will pay for covered services in a plan year. After you've spent this amount of money on things like your deductible, your copays, and your coinsurance, your plan will pay for 100% of the cost of covered services for the remainder of that plan year. In our bucket example, your out-of-pocket maximum is represented by the top line or top of the bucket. We're going to have my coworker and good friend Elizabeth put this all together into one example here in this next segment.
Okay, let's put this all into one example. Let's say that you have an insurance plan with a $1,000 deductible and a $2,500 maximum out of pocket with 80% coinsurance. The first thing you'll be responsible for is meeting your deductible. Once you have paid $1,000 towards the cost of covered medical services, you will have met your deductible. This is indicated by the first line in the bucket. At this point, your coinsurance will begin. Next, let's say you slip and fall and have a $7,500 hospital bill. Since you have already met your deductible, your coinsurance will now pay for 80% of the covered services, and you will pay 20%. 20% of this hospital bill is $1,500. At this point, you have paid $1,000 towards your deductible, plus the $1,500 from your hospital bills. Your total spending on covered medical services is now $2,500, which is also the maximum out of pocket. This means you have filled your bucket and that your plan will pay for 100% of covered services for the remainder of the calendar year.
Thanks for tuning in to the first episode of Nick Knows Insurance. I thought it would be a good idea to kick this channel off with something easy like defining some terms, but in the future I'm going to go over some ways in which you can use your insurance plan in different scenarios, in different instances. I'm also going to cover some new terms, and if you guys have any suggestions or want to see some videos of your own, I'd love to hear your feedback. I'm just starting this channel off, so please give me a follow, a like, and a subscribe. And until then, I'll see you next time.